Good morning, everybody. Good afternoon to my friends in Europe. I am Mark Sebastian, your only option. This is Option Pit Live. Reminder, we're here every Friday at 9 a.m. Eastern Time to give you our best and brightest ideas for the week, tell you about what's been important, and steer you in the days and weeks ahead. So, with that, let's dig into what's going on. And obviously, it's Friday, and the Fed's favorite measure of inflation, PCE, is out. Now, it was hot, meaning it was above what traders were expecting. We showed a month-over-month increase of 0.4%, and the market was looking for 0.3, and a year-over-year of 2.8. We were looking for 2.7. So not crazy. All right. Now, the all items measure, the price index rose 0.3 on the month and 2.5 from a year ago, both in line. So it's not like this is end of the world. Like when I'm looking at, where S&P futures are, we're down, but nothing like we've been down in the past. And that might be a theme that we're starting to run into. We may still sell off some, or we might rally a little bit here. But the rate of change of the market is clearly slowing. And that is what I think is so important here, is that the rate of change in the market is slowing. And you can see that in SPX. So here, we can share my screen. I want to show you this. So this yellow line, I'm going to show you this, guys. Come on. There we go. This yellow line represents average true range. So that's how much we're moving on average every day over on a 10-day rolling period. We peaked out at the S&P averaging over 100 points a day of movement. That wouldn't be a big deal if the S&P was 15,000, but with the S&P at, at this point, it was about 50, right where we are, 5,700. That is almost 2% a day. That is cuckoo bananas high. We're now starting to ease back. But you can see where we came from. If I go back on a 1 year, ATR got above even the August levels when the VIX was 38. And previous peaks had been into the 70s. Normally, we're going to be around a 60, maybe a 55, call it 1% a day. And yet we're doubling that. That's been what has pushed VIX higher, what's pushed volatility higher, and what's really freaked out markets. It's really not been, because what's been interesting about this sell-off and little rally, have there been any gaps? Have we had gaps? Well, let's take a second look here. The only gap, look, in each case, very rarely do we actually get a gap down. We got one lower on the 10th to the 11th. On the 7th, we closed 57.70, and then opened the next day 57.05. So down $65 before we kind of really gave it a go. The low was 55.66. It was a really pretty intense day. We closed just above 5,600. And then the other gap that we had was from Friday the 21st to this Monday, the 24th. And we got a nice pop then. Pretty interesting. So we're getting a lot of movement, but what's the movement isn't back and forth. We're not getting gaps. and just an absolute, it's very different than, some of the major events we've had. So like the 18th, so let's hone in on here. Look at this look at the size of this candle. Okay, the market closes on the 17th at 60.50. We actually open only down $3. And by the end of the day, we've dropped almost 200. We haven't had a move as big as the 18th this entire period. Look at the size of that candle. So this has been consistent. It's been merciless, the selling, but it hasn't been panicky. It hasn't been panicky. You're saying VIX got to 29. All right. Well, looking at VIX, and I just want to show you this part of it. All right. This period is February 20th to March 6th. If I showed a professional trader this pattern of VIX going up, and I asked them what was coming next, what do you think those professional traders would tell me? If they'd never seen this chart before, they didn't know what was coming next, what do you think those professional traders would tell me? Yeah, they would say, "Oh, we're about to get a major market correction, and the VIX is gonna pop." Except that's not what happened. We didn't even get to 30. The way this thing was rallying, it was setting up for a move to like 50 or 60, not 29. And yet that seems to be the case. And even with the return to selling, what I want you to notice is that now we're getting lower highs in VIX and lower lows in VIX. Lower highs and lower lows. So what does that mean for you? Here's my take. VIX, which is, people often say, Mark, what's the VIX? And I tell them the VIX is our best measure of how expensive it is to buy options right now in the S&P, and a pretty good gauge for the overall market. So my take, even if we do hit some new lows here, without a real catalyst, we may very well retest the low at 5,500. I think we briefly 5503, maybe break 5,500, but it may be slow. It may be grinding, and you might not see the VIX. You probably won't see the VIX get over 25. We need a violent event for the VIX to break out at this point, and we have not gotten that. So what does that mean for you? Well, we're going to talk about this a little more, but on Thursday night, I got to introduce Hannah and Hans Albrecht as they launched their new triple income strategy. And what I love about the triple income strategy and where we are right now is that the we don't know what's coming next piece is basically out of the way. The market still stinks, but there's not a lot of uncertainty out there. So my belief is that this might be the opportunity to start your income trading lifestyle. And the best person to do it, the person I'm going to be trading with, if there's one little, every trader is good at some things and not as good at others. One of my weak spots is income trading, collecting premium. I am going to be in Hans's sessions, following along with the trades, and I can't wait to do it. Hans has a 93% win rate, and these are live trades, and an average return of 15%, positive 15%, because he has what he calls the ripcord that gets him out of the way of major events. And that's something I think a lot of income traders miss. They see high vol, high option prices, and think this is a huge opportunity, but they don't have a way of steering themselves once they get into a trade. And that's really what Hans provides. So if you haven't joined Hans yet, this is your opportunity. I invite you to join him right now in what we call turbo income. So hop in and join us. Speaking of people hopping in, let's bring in our own hopper inner. He is Andrew T. Giovinazzi, T being short for two-way trades. Two-way trades, Giovinazzi. Good morning. Happy Friday. That beard is really, really coming in, bud.
You like it?
I don't dislike it. I don't like the gray because you outside of your beard, when you're shaved, someone would swear you're in your 40s, right?
I think yeah, nobody would believe I'm almost 60 maybe. But anyway, I can't believe
slap on the beard. Now all of a sudden, if you tell me that you're 55, I'm like, oh yeah, no, that's believable.
Yeah, you're 55. Yeah. Plus, I was I don't even want to go into it this morning, but
it looks good.
I was hunting this morning.
Hunting? Nice.
Well, not really.
Oh no.
Rats got into my compost.
Oh right. Oh, you were rat hunting.
I shot
rat X.
I got 2.
Oh, did you shoot them?
Yeah.
Oh my.
So there's probably 2 left, but I set out traps for them, and
All right.
And they I guess you know what? They're hungry.
If one of them's, just before you kill them, the ones that you trap, put a little bit of like chicken coq au vin in front of them to make sure that they're not, secretly a chef that wants to live on your head under a hat. Can you do that for me?
So anyway, that was my morning.
Nice.
And I actually posted it. I put my hunting scope up. So now I'm like watching the compost. So whenever they start to move, I just grab my gun and try to see if I can pop one in the head. But they got to go. So I got to redo my compost ideas now. It's not happening. So much for life in the woods.
There you go. So now, what if you've got Pizza Rat living in there? The one that was dragging the big piece of pizza in New York City. What if he migrated?
I'll tell you what. Who knows?
I'm moving to Maine.
Yeah, they are. That it's never been a problem until this year. Also, on a side, okay. So we were talking about vol and two-way trades.
Yeah,
and you're right, Mark. The ranges for the market have come down quite a bit.
Yeah.
Right. So, as always, good observations. So again, expecting I think folks were sort of expecting the worst. I think a lot of money, I think you pointed this out a couple of weeks ago, money is starting to leave the Mag 7 to go to potentially greener pastures. I mean, you have to think about it, how much growth you're going to get out of Microsoft at a 35 PE, Apple at a 30 something PE. Warren Buffett lightening up on them. There are other stocks that you can buy that have growth potential that will benefit from AI. That's just not, Microsoft. Arguably, is probably the cheaper of the bunch, but they might also have the harder competitive waters down.
Right. I mean, historically cheap of that group is probably, relative to it's past multiples. Amazon to me looks relatively cheap, but you could also ask yourself if it's, maybe becoming a more mature company and we should stop expecting a 56 PE. The most overvalued out of that entire group, in my opinion, is Apple. And I think you're on board with that. But it's a safety play. I keep telling people Apple is the new U.S. Treasury until the U.S. gets its house in order. Sounds like they're starting to do that. But until the U.S. gets its house in order, Apple's the new U.S. Treasury. So people are like, hey, why were we only down 18 when, all these major stocks? Because people crowded into Apple. Now, when I see Apple selling off, that to me is the market starting to get constructive. And just to show a point, I want Lewis, can we show my screen one more time? So what we're looking at is the 3-month returns of the 3 big, huge ETFs and one more ETF. And I'm going to talk about this. So the very top line, this purple one, is the Dow Jones Industrial Average, the diamonds. In the last 3 months, it is down 1.6%. So think about this major market sell-off, and then go, wait, the Dow's only down 1.6% in 3 months. The S&P. Now, that's not peak to trough. That's, from the beginning of the 3-month period. The S&P is down about 5%. The Qs are down 7.8%. And then last but not least, this purple one, this is going to be an ETF that maybe some of you haven't heard of, but it's one that I pay close attention to. It is MGK. MGK, for those of you that are unaware, is the Vanguard Mega Cap Growth. So it's only, I believe, about the 90 biggest stocks in the S&P 500. Now, what do you notice about, and it is cap weighted again. So what do you notice about which index, which ETFs had the best performance and which has the worst? And what do you think was the common denominator that determined whether you're having just kind of a cruddy 3 months or a really bad 3 months down over 10%? What do you
how much grade 8 you got in your portfolio?
Yeah, the more exposure to Apple, Amazon, Broadcom, Google, Meta, Microsoft, Nvidia, and Tesla your portfolio has, the worse the last 3 months have been for you.
Right.
It's been a total rotation. The Dow basically tells us not that much money has actually left the market in the last 3 months. It's rotated.
I like that. Well, you could make an argument too that if they're trying to sort of right size the government, there's more opportunity for smaller companies, Main Street, stuff like that.
Yeah.
Where the Mag 7 was like the big Hoover that was after COVID, right? That was just sucking up, everybody. And all of a sudden, like, whoa, there's all kinds of other things out there that, there are other businesses, other things that can be doing well. And of course, we'll see how everything goes after whatever the latest tariff dust up is on April 2nd, which again, as a date, I find interesting because is that the date, Mark? And then after that date, everything's cool. And, we're going to know what's going on.
I mean, it is crazy when you look at implied volatility at the cost of options. When you look at the cost of options, there is a dramatic drop off in option prices after April 4th.
Yeah, because after that, you're like, okay,
they think after the 2nd, everything just goes away.
Well, you
what's done is done.
When you were trading, where you would have that feeling, you could feel how sort of option premiums. You would look at your book, and all of a sudden you're like, I'm starting to buy a lot of options, even though when I don't think so, right? Because in the old days, but we had auto quote, we had the raise system, poets, and all this. And you're on, and all of a sudden you just realize you would look at your trade log, electric trade log, and it's like buy. All you're doing is buying.
Yeah.
And you're buying farther out. And part of this is it doesn't mean the market's just going to go down, or let's say we we have a little less performance,
Mm-hmm.
we're not going to rocket back up to all-time highs unless people buy the Mag 7 or unless a lot more money comes in, right? Because just from market cap weighted point of view. So the big indexes cannot go anywhere. But volatility could still come down a little bit, even though, maybe 16, 15 is kind of the lows for a while. Then from there it bounces. But it could also, it could be more of like an income strategy market, right? Where you're like, you don't have that go-go Amazon from 200 to 250. Okay. It's not there. It's not there. Google to 250, not there. Apple, clearly, as we've discussed, is going to be kind of like a bond basically at this point, unless there's more mass selling. But all of a sudden, you do have slightly higher volatility overall, which would make for, decent income generation ideas, buying options near the money, selling options out of the money, and, collecting those kind of credits. And if the market does go down, you still have an opportunity to make some money, or more, covered strategies like, like basic collars, right? You buy puts against your stock because you're like, and there's reason to be freaky, right? There's reason to be freaked out, but higher vols and higher interest rates, you actually get something for your calls. So, just looking at the market that we have, there are other things you can do if you just accept that, hey, Apple's just not going to go up 25% or 15%.
Well, and that's where
in a week.
That's where I think this market is perfect for turbo income, right?
Yeah.
Because when you look at turbo income, what Hans is doing, he's using the market temperature indicator, the MTI, to make sure the overall things are he can trade them, and then he's using his 3-filter system to pull all the stocks down to a small group of stocks, and then that small group of stocks into the best option to trade. And what I love is his measure of vol yield. Nobody does this.
Right.
Nobody does this. You're going to hear a lot of people talk about something called yield. And now yield is, okay, I have a $10, a stock's trading $10. I can sell a $10 put at $1. And it expires in a year. My yield, 10%. Traders think if I get a good yield out of an option premium trade, that's all there is to it. No, you have to risk adjust. So think about it this way. What is safer, selling a 5% out of the money put spread in Procter & Gamble, or a 5% out of the money put spread in Robinhood? Right? You have to make an adjustment to make apples and oranges become apples and apples. Right. And that is what Hans does. And it allows him to filter through the entire market to find that one trade. And then he's got his ripcord, which he successfully used in March to get him out of the way of trouble with just a tiny loss. The biggest issue with using options to produce income is what, Andrew?
The big stinky loss.
Right. You make 8%, 8%, and you do that over and over and over again. And then you have 3 losses of 100% or more.
Yeah. 200 to 300, right?
Yeah. And now you've lost everything and you're down.
Right.
That is why we never really had any type of income like weekly profit cycles is income generation, but it's done through, buying options, which I know sounds counterintuitive, but it is. And then most of our other services are trying to trade around volatility.
Right.
They're not trying to create income. And it was because, I said at the top of the show, probably the weakest part of my trading is on the premium selling side, the managing short premium side. So I intend to join and listen and trade with Hans when he begins. People are asking if you were going to be there too, actually, last night and the present. They're like, well, Mark is going to be there. Well, AG? And I was like,
I just said hello to everybody, but
yeah. Yeah. So if you haven't learned how to sell options in a controlled manner, and you're not creating income now, I do believe that this is the best time to be starting income trading in the last 4 years. Really, the only other time that maybe could have been better than this would have been kind of coming out of COVID. But even that wasn't great. You probably would have needed, because the market rally was so violent, you would have felt like, you missed out.
Yeah, as I recall, we did the market Warren, the Warren market. What did you call that? Right? We took $100,000 in margin and sold a bunch of puts and made like 30%.
42%. Yeah, it was nice.
It's pretty good.
Yeah.
Oh, I got some numbers from Licia because it's 9:30.
Oh yeah.
You want to pull up SPX? She's saying upside. So her downside numbers are 5630, 5600, 5522 for SPX.
It was 5630.
5630.
5600.
Kind of, I guess, where she was drawing her little, her pitchfork things.
Yep, 5600.
5600, 5522.
What one?
5522.
Oh wow. Well, that would be the low close from the 13th. We get down there, we got some real problems.
We got there. I think people are starting to lose confidence in the mag. The mag 7 is, instead of a 30 PE.
No, there is an opportunity to rotate, and actually, with them having been deflated here, there might be some opportunity for income generation and maybe buy options, buy stocks at really low prices. Certainly in like, a few names like Amazon. What was Licia's upside levels?
5717, 5732. Those are her two kind of numbers here that she wants to see us sort of rip.
So on the upside, we're looking for 5717. And what was the last one?
5732.
5732. All right.
Which brings in 5775 as an upside target. So I feel like we were there last week or the beginning of this week.
Yeah, we got right there. On Tuesday.
And a little resistance of gold at 3080. 3080.
All right. Well, Andrew, it is 8:30, 9:30 Eastern, 8:30 Central.
Yep.
Market just opened. We're down, for that PCE number, the initial reaction was really bad, and we've actually bounced a little bit. So right now the market is down 0.3%, down $18. The NASDAQ is down a little over 0.5%, down $2.50, call it the triple Q. Mm-hmm. And the Dow is down 0.25%. What are you? VIX is up 60 cents.
I think we float around here a little bit today. We got this, I wouldn't surprise me if VIX is up a little, closes up a little on a Friday because we have the April 2nd. So, volatility is not, S&P options are not going to go down very much. I have a hard time believing that we rally today, but we don't sell off either.
Yesterday we closed the gap on the S&P from Monday's gap.
Yeah.
Today we're retesting it, and now is where decisions will be made. Are they going to try and rip it again, or is this where we get a little bit of selling? But again, I don't think the selling is going to be these huge candles. It's going to be, especially ahead of April 2nd, you're probably just going to see more kind of consistent down 0.5%, which again, perfect for income trading and Hans's triple income strategy, Turbo, which is available in Turbo Income. And if you haven't joined, click the link in chat and watch your emails because you do not because you're going to want us to take the time to watch the replay from last night. It was really, really educational, informative. I learned a few things, and so will you. So if you haven't seen the replay, it'll pop on right after the show here. Kick back, play it in the background while you're trading. You're going to find some nuggets. Trust me, it'll be worth it. So Andrew, we're up against it. I know we didn't get to your vehicle today. We'll hopefully get to it next week. But what do you got? We've given our market predictions. I want to remind you one more time, check your email boxes for that replay, or stick around here right after and we'll run it. So for Licia J. Leslie out on assignment, and of course, our own Andrew T. Giovinazzi T for Turbo Trades. I am Mark Sebastian. I am your only option. I hope you have a great weekend, folks. We'll see you next Friday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.